In buying a house, credit plays a fundamental role in making it a success. It affects the interest rate you gain on your loan as well as the long-term cost of borrowing certain amounts. If you have a low credit score or no credit at all, the dream of buying yourself a home will be put on hold, or at least it'd be very expensive. Kinda sad, right? Lucky for you, we're here to give you tips on how to build credit fast. Before we start, do click the like button and subscribe while you're at it. If you're done with that, let's work on getting you that sturdy house with a nice patio. To state the obvious, this video is for people that need to build credit fast in order to buy a house. Now, some of you might be in a sticky situation looking at your credit reports and seeing that it's nowhere near what it needs to be. You have to do something fast to get it up. Or maybe you're one of those people who think that actual cash is more important than credit cards. As a result, you never attempted to utilize credit to use credit, and now you need to get your credit score up as soon as possible. Or maybe in the past your score was somewhere near the goal, but you made some faulty decisions and now your score dropped. Possibly something about the ongoing pandemic made your score drop too. Whatever scenario you're in, we're gonna give you some advice and help you build credit fast. So what do you need to focus on first? Get a hold of all 3 of your credit reports. The mortgage lender will put out your 3 credit reports and scores. They'll pick the middle score that's not the lowest or highest. That's why you need to have all 3 of your scores to gain insight on where you're at. It's extremely important to check all 3 of your credit scores at least once a year. It also allows you to ensure that everything is correct. Not only that, it also lets you know what you're working with and where to start. Set your bills on autopay. The biggest factor in your credit score is your payment history. In fact, it accounts for a whopping 35% of your total score. To ensure your payment history is stellar, opt for autopay if it's possible. If that's not an option, set yourself a reminder a few days before each payment is due just to be safe. Late payments can hurt your score tremendously. Check for negatives. Take a look at your credit reports so you can see how everything's doing. You might be dealing with collections, charge-offs, and late payments, and that might hinder the progress of building credit fast. One of the most important things to remember when looking at those negative accounts on your credit report is to figure out how to deal with them. Negative accounts slow down how fast your credit grows. Having negative accounts on your credit is like the equivalent of running a race despite having the ability to run fast, but the catch is that you have your mom's 20-pound ankle weights on. The same thought applies to those negative accounts on your credit report. So you better do something to resolve them so they don't accumulate and slow you down. Do know that paying off collections doesn't help your credit score, and paying them off also doesn't guarantee that they'll be removed. Now, in terms of charge-offs, the majority of mortgage lenders overlook it in regards to approving you for a mortgage. It can depend on how old the mortgage is. Do ask whatever lender you choose and how they treat those, so that you can calculate what you need to do with your charge-offs. Now that you've taken a hold of all 3 of your credit reports and scores, and you know your current standing, now it's time for the real deal: actually building credit. To do this, you have 2 choices: have a loan and have a credit card. But what will help you build credit faster? We'll share that with you in a sec. But what you need to look at now is, does the company report to all 3 credit bureaus? How important is that, by the way? The mortgage lender is going to pull all 3 of your credit reports, so you need all of them to be as high as possible. You won't know what score will end up as your credit score by the time you apply, so you need to make sure that you're doing everything to increase them all. Now, how do you find a company that reports to all 3 credit bureaus? In general, big shot companies like bigger banks and bigger credit unions are going to do just that. The small ones, not all the time. Why is that, you ask? Well, they have to pay to report to the credit bureaus. Smaller companies, banks, and credit unions are trying to pay all that extra money to report all that. So be smart in identifying those companies that report to all 3 bureaus. Okay, so now that you've looked up accounts that report to all credit bureaus and you've identified which is going to be better for you, the loan or the credit card, the determining factor here is how they hit your credit report. A part of your credit score calculation which bases the amount of points that you get off of how much debt that you owe. A loan shows up as you owe a bunch of money, whereas if you get a credit card, it shows that a whole bunch of money is available to you, but you haven't spent it yet. Knowing that, you can already imagine which one of those can help your credit score boost faster. That is definitely a credit card or a revolving line of credit. A loan does hit your credit report a lot, but it only works that way when you're a person that's never had a loan at all before in your credit report. The loan hitting your credit report for the first time can definitely help your score. However, when you pay off the loan, your credit score can drop. But if you get a credit card, it shows that a whole bunch of money is available to you in comparison to a whole bunch of money owed. At most times, a lot of people get more points quickly when they get those cards. Scores can go up quickly to 90 points immediately after getting a credit card. This is also a common case for a lot of people. Their credit cards usually build up credit scores faster than loans do. Again, unless you do not have any other loans in your credit report and you've never had a loan before. That being said, if you're a person that has not been using credit at all, and you're on your way to build credit and you get this account for the first time, you will not initially see an increase in your scores. So yes, if you're trying to build up credit and you haven't used it at all before, you will have to wait around 7 months because in most cases, it usually takes a month for it to hit your credit card report, and it can also be a month behind in reporting. In about 7 months, you can expect to see a credit score when you go to a lender to try to get approved. Usually across the board, it is about a 660 score that you need to have in order to get approved. That is the goal that you should be aiming for, as well as trying to get your credit score. Keep balances low and cards open. A surefire way to build your credit is by keeping your balances low. Experts suggest you to avoid using more than 30% of your available credit, discussed as your credit utilization ratio. For example, if your credit limit is $1,000, it's recommended that you spend no more than $300. In fact, you should probably spend much less than that if you're able, and if you're carrying debt, pay that down ASAP. Additionally, even if you stop spending money on your credit card altogether, you should keep it open, especially if it's an older card. The reason for this tip is that your older cards mark the beginning of your credit history, and lenders want to see an established credit profile. Also, closing a card will reduce the amount of credit you have available, and as a result, may bump your credit utilization ratio up above 30%. If you abide by the steps that we talked about, you should be able to boost your credit score fast in order to achieve that dream of getting a house. We hope this information gets you to wherever you want to be. If you found this video helpful, do click like and subscribe and turn on post notifications. We're looking forward to seeing you in the next video.